Let's talk a little retail sales. Retail sales came in hotter than expected in September, rising 0.7% month over month, showing consumers are still spending despite higher inflation, excluding auto sales rose 0.6% from a month ago. There you're taking a look at the headline figures, both month over month, year over year was up by about 3.8%. But in that kind of cyclical, or rather sequential move, I should say, on month over month, a few of the areas that jumped out to me, most notably where you saw declines, were actually in apparel and in electronics, two of the big themes that we'll watch to see how that plays out once we get into the holiday season as well.
Yeah, and it's also just what this means here for the broader economy,
Yes.
right? Because the resilient consumer has really been the focal point as one of the big things that has kept the economy from falling into a recession over the last several quarters. When we came into the start of the year with many forecasters expecting us to see a recession at this point. So clearly the consumer, one of the more resilient parts of the economy here, and one of the reasons why we have not seen a bigger pullback in terms of growth. But what this means is showing once again that consumers are still out there spending in the face of higher rates, and also in the face of the fact that so many, at least according to many estimates out there, obviously the pandemic era savings, that dwindling, whether or not that's zero, that's up for debate right now. But again, just consumers under more and more pressure. But 9 of 13 categories saw a rise in sales in this report. Sales at miscellaneous store retailers leading all categories. That was up 3% from a month ago. And then August's number was also revised higher. So we talk about the fact that consumers are still out there spending in the wake, despite the pressure that they're seeing from higher rates, despite the pressure that they're seeing from persistent inflation. So, of course, this begs the question, how long and if it is going to last?
You know, I kind of think about how the consumer, where they're spending, of course, and that gets revealed through this report, but additionally, how they're spending and whether they're tapping more of the credit right now, or tapping, swiping, whatever we're doing these days. Credit card balances, according to the Federal Reserve of New York, New York Fed continues to publish on a quarterly basis where consumers are leaning on credit more. Credit card balances in their most recent report saw brisk growth, they said, rising by $45 billion, series high of $1.03 trillion. So how the consumer is spending and certainly kind of drawing upon some of those cash excesses that they did have, that's showing up now in the data based on how they are spending when they go out to either, for those that are still purchasing furniture out there, furniture was one of the areas that still was one of the kind of interesting year over year declines. But then again, you think about how the consumer is going to spend going into the next coming months, where they're going to be looking for more deals. They're looking for discounts, the promotions. In my group chats, I'm getting reminders about Amazon Prime Day, and the point where I have to respond, hey guys, you really don't know me that well, obviously. But at the same time, more consumers are alerting each other about where the deals are taking place. So that is really giving you a sense of how the consumer is thinking right now, looking for discounts, looking for promotions. And if they can't pay it outright in cash, they're saying, just swipe the credit card, we'll cover it later.
Yeah, and of course, just what this means also for so many of these consumer-facing brands. When you take a look at these stocks, consumer staples, consumer discretionary names have actually been under a pretty decent amount of pressure recently. More than 24 stocks in the consumer staples and discretionary sectors in the S&P 500 have been hitting their 52-week lows so far this month. So it also begs the question whether or not we might see a bit of a turnaround, or if more pressure, obviously, on the consumer could place a little bit more pressure on some of these names. Yeah.